All right. Hello, everybody, and welcome to the Crypto Cowboy Show. I'm Jay Scott, aka Crypto Cowboy. I'm the creator of Freedom Life 3.0, where we help you find your financial freedom through investing in hard assets like crypto and in real estate and in precious metals. Today, we're going to be talking about the business cycle and how it equates to global liquidity, which is on the rise, and how that can allocate to your crypto portfolio. So we're going to talk about when to be in the markets, when to be out. And so stay tuned. All right. Hello, folks. All right. So let's talk about the business cycle and what it means to investing, because it's really important. We're about to enter the best time for investing in crypto. We're about to take off on the bull run, the real bull run. And so let's talk about that. So of course, this is not financial advice. I'm not a financial advisor. I'm just a guy on the internet wearing a cowboy hat, talking about crypto. All right. So this is the key. Global liquidity. I've been talking about it for a while now. And what we can see is that when global liquidity rises, well, so does Bitcoin. So you've got Bitcoin in the black, you've got global liquidity in the orange, and you can see right here that global liquidity is ticking up just a little bit ahead of Bitcoin. But you can see all along here is that it's followed a pretty consistent path, right? As global liquidity rises, so does the price of Bitcoin. So we've been in a tightening cycle for, well, a few years now, right? And Bitcoin's done really, really well. But we're now about to really pour on the global liquidity. All the countries, including China, Japan, and the US, are certainly now going to start pouring in more liquidity, which means they're just going to print more money, right? And when they print money, deflates fiat currency, as we know, which means that if you're saving in dollars, you're losing value, probably around 14 to 15% a year. I don't know if you knew that. But with Bitcoin, which rises and has been returning around 100% annualized a year, when global liquidity pours in, that's when it really takes off. And that's happening now. So let's talk about in detail, though, what this looks like. And we're gonna really look at the business cycle, because this isn't some new phenomena. This has been going on a long time. And as this image shows, this is the basic business cycle. And you can see that you go through these expansions right in here. Then you hit this peak, and then you go through these contractions, right? And then you hop up again. And we can see this trend here, right? And it's just the trend that is always going up. And if you look at, and we're going to look at some charts here that'll show us that the NASDAQ, the S&P 500, Bitcoin, really any hard assets, real estate, all of them go up. And that's the key to investing. And the reason I've chosen crypto to be where I'm really going to put my money is because of all of the markets, crypto is the one that goes up the most. Makes sense if you want to be in that, right? So we can see as the global economy expands, assets always expand too. And this cycle just repeats over for decades and decades. All right, so let's take a look at the S&P 500. So look, this is the top 500 companies in the world. And we can see that the secular trend, secular meaning that the overall trend in this 4-year cycle is up. And if you're in assets, if you're in the just even in an index fund in the S&P 500, you're doing pretty good. Let's take a look at the next one. Look at the NASDAQ. Same thing. NASDAQ is basically a tech stocks. So we've known that tech stocks have been doing really good lately, right? So with the inventions of computers and the internet, more tech businesses started doing better and better. And if you invested in them, you did pretty good. Well, let's take a look at the crypto market. And we're in the same secular uptrend. But the thing is, and we're going to talk about in more detail, is that, again, this is the area, this is the market that goes up the most. So we can see that as the economy moved forward and the blockchain was created and Bitcoin was created in the last 15 years, people are moving into Bitcoin, more businesses are coming on chain, and the crypto market cap is growing, and crypto is rising. All right, so this is a trend, and it's basically the business cycle, and that's what we're going to talk about. So if you're only looking at the crypto market and you're hearing about liquidity, what we're talking about is just the general business cycle, and we're going to go into detail of what that looks like. So here's the seasons broken down, and you can see that you've got winter, spring, summer, and fall. Now, these have nothing to do with the actual weather outside, but this is how the market cycles move through. And so let's talk about these in detail. Okay, so if the economy is moving too fast and it's too hot, now we saw that when we had a lot of inflation, because basically that's what happens when the economy starts revving up too much. You get inflation. And so for the last few years, the Fed has been rising interest rates really high, up until around 9%, right? And that's how they were trying to slow the economy down. And of course, just recently now, they realize, okay, that means there's going to be more unemployment. There's going to be businesses that are going to have a hard time financing and getting loans because interest rates are so high, and that just slows everything down. So we have to move through these cycles. So let's take a look at these. Let's start with spring. Yeah, we're going to start with, or are we going to start with winter? Yeah, we'll start with spring. So spring is when you've got this deflationary situation. Inflation is starting to fall due to the previous season's tightening monetary policy. That's where we've been. We've been in spring for quite a while, and we're just now seeing that starting to thaw, right? We're starting to move into summer. So as we get into summer, we're going to see an inflationary boom, because now central banks are loosening monetary policy, which means they're going to inject more liquidity, which means they're basically just printing money, right? And so the economy starts to pick up. Well, we're just at the very beginning of that right now, to be honest. Then we move into fall, and now we've got a deflationary again. So monetary policy starting to tighten again, slowing down the economy. This cycle just goes on and on. It's been the way of the cycles for decades and decades. So this is a portfolio allocation that we can use when we're looking at the business cycle on how we would invest in crypto. And so we're going to go through this in detail, but I think I'm going to go back to this actual slide so we can talk again in detail. All right. So the main idea is that you want to be completely risk off heading into winter, right? Risk off meaning that we want to be out of anything that's risky. We want to be out of any altcoins, basically. So during the fall, we really want to start taking profits and preparing for winter. All right, so let's take a look at winter. So let's see where we are here in winter, and we can see here then this allocation that what we want to be is completely risk off in the winter. What does that mean? All right, so that means that we're going to be holding no altcoins. We want to be holding the majors, which we want to be holding Bitcoin. And if you have conviction in maybe the next two, which would be Ethereum and Solana right now, market cap wise, you might have a small allocation to that. But most of your investments are going to be in stable coins. This is when you have taken profits and now you're out. You're waiting, you're in a bear market now. And this is where the smart investors are starting to allocate more in a DCA into, say, Bitcoin. We're not in any alts at this time. And so this is our bear market. This is the winter. This is where we were 2 years ago in the bear market when Bitcoin was, had fallen down to 19,000 after being up around 70,000, right? So this is now the winter. All right. So during winter, we then move into spring. All right. So now we're going to start to shift some of our stable coins more back into Bitcoin. So we may either be DCAing back into Bitcoin, Ethereum, and Solana. In my case, I allocate about 60% into Bitcoin of my whole portfolio. So I'm allocating, DCAing again back in. I'm starting to watch and maybe put, even more back in. Winter, I was just in stable coins and Bitcoin, and maybe a little allocation into what I consider the other blue chips, Solana and Ethereum. And of course, that may change in the next cycle. May not be Solana, may not be Ethereum, but that was the narrative in the last few cycles. Ethereum and then Solana in this last cycle is the one that's catching up. And we're going to see what happens to it in summer, because we think it's going to maybe take over ETH. So we'll see what happens. All right, so you want to just continue moving some of your stable coins back into Bitcoin, back into the other blue chips, but we're still not into alts yet. Until we get into summer, now we're risk on, baby. All right, so now in summer, we're zero in stable coins, and we're looking to get into the blue chips, to Bitcoin, and into the majors. And this is the first time we start looking at altcoins, because in summer, that's when liquidity is happening. That's when we're on risk off. That means things are going to the moon, right? And so we're moving up. So right now, you want to be in those stable coins. And actually, you want to have started looking at what stable coins you want to allocate to in the spring and maybe even into the winter. You want to start looking at what is the next narrative. Is it going to be AI continuing? I think it will be. AI was the narrative in the last bear market. We could tell it was coming up. ChatGPT was just happening, and we were looking, it looks like AI is going to be the narrative. So a lot of AI companies, a lot of AI tokens and coins were happening. And at that time, I got into some AI. Or let me put it this way, I was preparing. And so when things were cheap, I started buying in the bear market into some of these AI tokens. They were relatively cheap. And the plan is to ride them up through into the summer. So what happens, and the key to this is then in the summer, the next thing is we're going to be into fall, right? So we've got to be prepared on what happens, because now we're up at this summer, and then things are going to start going down again. So we can never pick the top, right? We're never going to pick the top of this. But let me go back to this one. Sorry. This is where you need to start planning. So in the fall, we're going to slowly start going down, and you're going to want to start selling, DCAing out of your crypto investments, your Bitcoin, your other major alts or blue chips, Sol, Ethereum in my case. And then you really want to start selling all of your altcoins. So if you had some of these AI plays like I did, by the time we get to the top of summer and we're starting to curve over into fall, you want to sell all those, because you have no idea if they're going to continue to be profitable, especially in a bear market. So the key is to sell that, start selling some of your Bitcoin, start selling some of your other blue chips, so that by the time you're back to winter again, you're completely out. And then the cycle starts all over again. And so that's how to take advantage of the business cycle. So again, where are we now? Well, I think we're right. We're right here. Boop. We are ready to hop into summer. And so hopefully, if you followed something close to this, you had been allocating to some alts as we're moving up, and now you want to continue to even pour in more, because now we're on that uptrend. In winter, you want to have identified what those alts would be, some of those AI plays, small coins, small caps, and then in spring, start moving into it and be ready in the summer to ride them up and continue to invest in them through summer, because everything's going up. At some point, though, the key is, when do I start selling? And nobody knows the top of this. There are some indicators that you can look out there that will show, has sort of a color chart, a rainbow chart. Let's see. It kind of looks, it doesn't really look like this, but basically there's a rainbow chart in these levels when we know that we're getting up into this area that we're going to start going down again. That's the cycle. It's been that way for 15 years and through crypto. And we can do really well because we don't have to ride it down. We can be selling, getting out, and then when the cycle repeats, we get back in when things are really cheap. It's kind of simple, really. The key is you've got to have the emotional wherewithal to actually do this. You've got to be able to get out of here at the top, right? And that's not easy because when everybody's talking about it and people are saying it's going to the moon and people think it's going to last forever, the unsophisticated investors are now just jumping in. They're like, oh man, I got to get in on this. But if you're a crypto investor and you followed this cycle and you started in winter to identify what you want to be in, and then as spring comes, you're jumping into this, you know that you got to be out of the market when everybody's talking about it, when the Uber driver and the taxi driver are talking about it and everybody and their uncle, right? That's when you want to be out of it. So it doesn't matter if you get out a little bit too early. The point is you're going out slowly. You might sell 10%. And then, as it's going up, and then maybe as it continues to go up another month or so, another 10, so that at some point you're mostly out. Now, you don't have to sell all of it. If you're a long-term Bitcoin holder like I am, I'm going to keep some of my Bitcoin, but I'm definitely going to be all of my alts. Going to sell some of my Solana and Ether, depending on where they are and how it goes, how much, so that by the time winter hits, I'm out of most everything, except for that portion of Bitcoin that I'm just going to save. I'm just going to keep that forever. I'm hodling that forever. All right. So I think that we can do really, really well in crypto. And this is the thing. The NASDAQ, the S&P 500, you saw that those are going up in a trend too. But typically 8 to 10% in the stock market, even though if you had a certain basket of, say, some tech stocks, they could do much, much better. But crypto is always going to do much better. And so you can catch up faster. If you look at the rule of 72, which basically dictates how long will it take you for you to double your money. If you look at that, it with 10%, it can take you 10 or 15 years to double your money. And with just 14 or 15%, then it's about 5 years. So with crypto at 20 to 50%, sometimes 100%, you can double your money in 2 years. And so this is how you catch up. So again, not financial advice. This is the plan I'm using. And we just look at what does the traditional business cycle tell us? What does global liquidity tell us? It's why we want to always be looking at how's that M2 money supply? Where is it? Is it going up or not? And if you just look, it's going up all over the world. So this is the time. This is the time. So where is Bitcoin right now? Well, it's still hovering around in the 60s. It's wants to get up there to its all-time high around 70, but it's touched that. But we've got a couple of months left. So I think November and December are going to be really good, and then we're just going to continue to slowly climb. Now, with all the ETFs, so I do want to mention this, with all of Wall Street and the Bitcoin ETFs, there is a lot of money moving into these ETFs. Is it possible that we don't have another one of these cycles where we go up and then down again? It is possible. But I think that we're in for probably at least one more. And even if the Bitcoin ETFs are there, we're going to have a business cycle no matter what, right? So it's going to affect this market just like any other market. So in general, this is still going to hold true. Will it go down as much? Maybe not. We don't know. But this plan is still solid however you handle it. Even if you pull it out in winter and it doesn't go down again, that's fine. You can still start to reallocate, but you're still going to have a summer and a winter. And, you can really make up for this because it took Warren Buffett about 40 years to, become a billionaire, right? We can do that a lot faster with crypto. And so let's get in there. We're about to hit it now. So hopefully this gives you some understanding of what the business cycle does, that it's been there, that we can follow it. It's not that complicated. You just have to kind of be in the right assets and just don't get carried away with meme coins. Look at some alts, look at a few of them, and I'm not talking about 30 of them, maybe 4 or 5 that you identify in fall and winter, and then start moving into them, and then ride them up, and then sell them in summer at the top, and then write it down again, whether it goes down 70% like it has in the past, or maybe only 20 or 30%. There is going to be a business cycle. All right. Well, thank you, everybody. Thank you for watching. And remember to subscribe to the channel if you want more crypto information news, more economic news, more about how do you invest in crypto by using just basic strategy and the business cycle, which has been around forever. Hey, if you're just starting out, or even if you've started out and you have some crypto, but you kind of forgot about it and you're not sure if you're going to get in and how to get in, take advantage of my free Crypto 101 Masterclass. It's going to give you a deep dive into really what is crypto, what's it all about, what problem does it solve, and why you should be in it and how to get into it, a step-by-step guide to actually invest in maybe your first Bitcoin or crypto, or to figure out where is that wallet that I invested a few $100 before but forgot about it because I just got disillusioned. Well, now's the time to get back into it. The business cycle is just turning up. We're just about to get into our awesome bull cycle. So go ahead and get that. The link's going to be in the description. So we'll see you next week, everybody. Bye for now.